How's it going, everyone? Welcome to this S&P 500 price analysis. We've actually started to see a pullback down into this 55 moving average. And the last few times that we've seen a reaction to this area of demand, price has pumped back towards the range high. In fact, it's made some consecutive higher highs. And now we're seeing the exact same thing over the past couple of hours. So the market has just opened now and we're seeing a bullish engulfing candle. But as you saw by the title of this video update and the thumbnail, we're almost at a brand new all-time high. So what I want to do is actually zoom out today to the daily time frame. And as you can see, 2025 beginning right over here, we're now going to look at this range that starts from October up until this point. So we're going to zoom into there. And I like to use the Fibonacci strategy myself. Before we get into that, I can see that this is a key area of support. And you see that the S&P came into this area on a second occasion. So this then creates a double bottom pattern, just like that, a W double bottom pattern. So this is the exact setup we're seeing right now on S&P to take it to a new all-time high. So I'm going to show you the exact levels of resistances in today's update that the S&P must break in order to reach this new all-time high. I'm also going to give you the bullish targets. But first of all, I want to show you why this is a key area of support using the Fibonacci. So we've marked out the lowest point of support of this range here on the 10th of October at 6.5k. But you can see that there are some other levels of support brought to you by the Fibonacci tool. So between 6.54 and 6.59, there's another area of support. I'm going to actually drag it from the 786 all the way down to the point of support here, the lowest point of the range. And this now becomes a demand area where I actually expect the market to bounce from. This is the expectation set from the Fibonacci's. However, if this point of support at 6.5k is lost, it will also prepare me for the worst case scenario and provide those bearish targets where a bounce could come from. So now that I've seen it actually maintain that area, avoiding the bearish targets, I now need to see where it's pumping back towards. And as it starts reversing and recovering the moving averages, the double bottom really starts to take shape. And we're looking for an eventual break of the neckline. Of course, we can mark out the highest wick as the level of resistance that needs breaking for a true breakout. But just like this example down over here with the points of supports, there could be earlier resistances, just like there were earlier points of support before the lowest wick. And there could be earlier signs of resistance before the highest wick. That's going to be shown by the Fibonacci tool. And if you want to learn this strategy, check out the discount link in the description on the one-to-one mentorship plan, the ebook, or to join my Discord community where you can request chart analysis on absolutely anything. So I'm actually being told by the Fibonacci tool that we're currently in that rejection area. So a nice trade would have been from this demand zone into this supply, and you could get out right now. Or you could use this entire range as a no trade zone and simply wait for either the support to be lost to hit those bearish targets or the resistance to be broken to now hit the bullish targets. The S&P could actually reach 7k very, very quickly once it actually successfully breaks beyond this 886 Fibonacci at 6.88k. This might be brand new to you, this strategy, but if we actually go over to the left over here and look at a previous dip. So we've got a dip right now, but let's look at the dip earlier this year, actually looking at this move down. Once the S&P pumped back towards the 786 and 886, what I'm going to do is make that red area just like what we've been doing right now. And you can see this area needs to be broken in order to hit those bullish targets. And we can see once that 886, it was here being used as resistance, the 786 became support. It also had the moving averages that form bullish signals, the bullish cross down over here, backing it up as support. Once it pivoted off that area and successfully broke past the 886 fib, we can see the S&P 500 tapped into the 1272, the 1414, and the 1474 fib. My apologies. Sorry for that tongue twister. So you can see with this example to the left that once the 886 breaks, you pump into this area. So why should I expect any different in this current example live right now? If this 886 can successfully break and turn into support, my expectation would be 7k at a minimum for the S&P. This might not sound like a drastic gain. Take a look at my Bitcoin updates if you are interested in something a bit more volatile, but of course a lot more higher risk dependent on the person. Now this would be a 2.5% gain to 7k, but looking to that example to the left earlier this year, it did manage to reach the 1.414 and the 1.474, which would bring a 3 to 3.6% gain for the S&P. Of course, with leverage, these moves can be greater. So just be aware that the S&P is on the verge of putting a new all-time high. It is technically an area of supply, so you could argue that this is not the right time to enter a buy trade only once this area is cleared. Just like this example here, once it pumped into this area of supply, we saw a move back down to the area of demand. This held and pumped it back into the area of supply. So we are caught in a range right now. We're in a range bound market, and that's why you could just trade the range. And so if this actually fails to break out through this red box, then it might return back down into this area of demand. So simply wait for a clear break of structure through the 886, 6.88k, or simply wait for the high here to break. But the Fibonacci tool today marked out the key areas of support and resistance and gives us expectations once those areas are broken. I'm looking at a minimal 7k target for the S&P once it can successfully break out of this resistance. Like, subscribe, comment and share. And if you want to learn this strategy, take action on the 30% discount linked in the description on the one-to-one mentorship plans, the ebook, or the Discord community where you can request analysis on any chart, whether it's stocks, cryptos, or Forex.